evening and welcome to everyone. Thank you so much for joining us. My name is Dr. Tanya Breland, and I represent the National Coalition of 100 Black Women, Central New Jersey chapter. 100 Black Women is known nationally for our advocacy work as we promote gender equity in health, education, and economic empowerment. We are really pleased this evening that our Economic Empowerment Committee is bringing to you programming from Sisternomics. And that programming this evening is going to focus on cryptocurrency and Bitcoin 101, a path to generational wealth. We're very pleased to have Mr. Eldridge Hawkins Jr. with us, who is going to basically share information about cryptocurrency and Bitcoin and help you to gain foundational understanding. He's not here to sell you anything. He's here basically to give you information, and we're very grateful for him taking time out of his busy schedule to share with us this evening. We will go a little, I guess, about an hour and a half max, but we're looking forward to all the information that's going to be shared this evening. And we want to thank Mr. Hawkins for being here, and also thank all of you, our guests, for being a part of it. And we will also be monitoring the chat for any questions that you may have throughout the program. There should be some opportunity later on for you to ask your questions. With that, I'm going to turn it over to one of the committee members, Sister Deborah Green, and she will introduce our guest speaker, and then he will take it from there. Thank you again for coming.
Thank you.
Welcome, everyone. Welcome. We have a truly dynamic speaker before us. I want you all to pay attention. This is a person who's serious, who has taken the time to learn about the new frontier in money. And I'm just going to give you a little bit of his credentials, and then I'm going to get out of the way so that you can hear from the resident expert. So Mr. Hawkins has his bachelor in business administration from Rider University. He has an MBA from Seton Hall University. There's more, y'all. He has a J.D. Mitchell Hamlin School of Law degree. He's a certified blockchain expert, certified crypto trader under the Blockchain Council. He's a CEO and founder of Black Belt Security and Investigation, LLC. He's a retired police officer, a former mayor of Orange, New Jersey, and the best is yet to come, a self-made millionaire, a self-made crypto millionaire. And with that being said, I present to you Eldridge Hawkins.
Oh, thank you very much for that introduction. I very much appreciate it. Crypto and blockchain is a very, very exciting space. It can, quite frankly, generate generational wealth, just as the title to the flyer denotes. And it's very, 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 very exciting. And believe it or not, it's not actually that difficult to become a millionaire in crypto. The difficulty is actually holding on to it once you do. So I'm going to explain some of those things. There's a lot of volatility. And I have this subheading here that says, do you have what it takes to change your financial reality? And I have that there because in order to jump into a space that is not an established norm, it does take a little bit of courage, right? A little bit of faith to go out and test the waters and do something that you and many others have not yet done before. And so when you do that, you have to kind of look broadly at the entire picture, take baby steps, not jump into the deep waters because that's what everybody else is doing, but progress at a pace that works for you. And what I'm going to attempt to do today is basically give you guys a high-level overview that will be applicable for folks with varying levels of expertise and knowledge about blockchain, but really start from the beginning, hence the title, Cryptocurrency and Blockchain 101, and go over some of the issues that you see on that first slide here. What is blockchain? What is Bitcoin? What are altcoins? Will crypto make me rich or will I lose everything? Because believe me, both are possible. How or on what platforms can I invest? Where do I choose to buy them? How do I choose which digital assets to buy? Where can I get more information? And where is the overall market going, at least in my opinion, relative to it being a bull and bear market in the short, medium, and long term. So that's what we hope to accomplish. And as we get through this, there'll be time for questions. And for my moderators, as I'm moving through this, if there's like a major issue or question that comes up in the chat, feel free to interrupt me, and and I'll pause and address that on that slide. Okay. All right. Moving on. So this is the disclaimer. Got to put it there. Everybody can read, but I'm not your financial advisor, nor are the people that are hosting this organization. So what we are bringing to you is for informational purposes only. In short, can somebody mute? Okay, there we go. What we're giving you is just for informational purposes. Do your own research, talk to your own financial experts, trade and participate at your own risk. And remember that what makes sense for one individual may not make sense for another. So just because I did something and it makes sense for me, it doesn't mean that it's the best for your particular financial situation. So just keep that in mind as you move forward. All right, she already kind of went through my background, so I don't need to harp on it. I've been in the space for a long time. I started back in 2017, involving myself in the crypto space. Interestingly, my father brought it to my attention. I thought it was internet funny money and kind of dismissed it until I saw Bitcoin go from about $300 to $3,000 in a short period of time. And I said, well, I'm never going to miss that wave again. So I started investigating crypto and I got involved. I actually bought XRP at the time at 15 cents, rode it all the way up to $3.50. I was making about $40,000 a day, and whoa, was that exciting. My father said at the time, he said, why don't you sell something? And I fell into the trap. I said, no, I'm never selling. Crypto's going to the moon. And what happened? A couple weeks later, the price collapsed, right? And a lot of that profit disappeared. Now, I made all that money back and then some, but when I started this video conference today, I mentioned making money is not entirely difficult. It's holding on to it, right? It's recognizing that it doesn't go up forever and that eventually it will come back down. This flyer here is just a national conference I participated in back in 2018. We had John McAfee there, Damon John from Shark Tank. They invited me out there to speak on a panel relative to blockchain. There was a lot of international players there. So, I've been around the space and I didn't just kind of jump in today. So, I come from the perspective of not just what the charts look like today, but what it actually feels like to go through bull and bear markets in crypto. Again, like I said in the beginning, success in investing starts with courage. And to be a successful business owner and investor, you have to be emotionally neutral to winning and losing. Winning and losing are just a part of the game. And that couldn't ring more true when it comes to crypto, because just like you can be too excited when your portfolio is up 1,000%, right? And just how you can be too depressed when your portfolio is down 90%, you have to kind of be emotionally neutral and know how to buy and sell based on what the charts are showing you, what the indications are showing you, or essentially based on what your price targets were, as you pre-planned your entries and your exits before the emotion set in. So when we talk about Bitcoin, everybody thinks about Bitcoin, and all they know in general sense is that it's this thing, this money thing that goes up in value a lot, and a lot of people are making money. Some people are losing money, but what is it really? Bitcoin is what's known as a digital asset that operates on something called a blockchain. Okay, and blockchain is immutable. It's a digital ledger that can verify transactions without any central authority. It's also best known for its crucial role in cryptocurrency systems such as Bitcoin, but you should know that that is not the only cryptocurrency. Folks new to the space think everything is Bitcoin. In fact, there are thousands and thousands of different types of cryptocurrency that run on different types of blockchains. They can be public or private in nature. So it's important that we recognize those basic distinctions and understand that the coin itself is not blockchain. That's something that operates on the blockchain, and each individual coin or blockchain can have different purposes or use cases. Now, currently, when we do business in society, when it comes to banking, we use middlemen and intermediaries to facilitate transactions. And that's one of the things that blockchain kind of moves away from. It's decentralized, it's trustless. It kind of eliminates the need for a third-party intermediary in a lot of circumstances, which helps create a use case for it, because it's cheaper to send money, it's faster to send money, and there's a lot of other potential things. It was first proposed back in 1991. And then it became more prominent in 2009 after the 2008 or so real estate and economic collapse that we encountered. Folks, specifically a gentleman or a group of people that have become to be known as Satoshi Nakamoto, put out a white paper. And it was designed to, in effect, create this new type of money, this new type of digital gold and transaction that would obviate the need for us to rely solely on the government money supply that is continually being debased because the government prints more money. Bitcoin is a scarce asset. There's only so many of them that can be made, which helps contribute to its value. But again, in the years since the use of blockchains, it's exploded to the creations of various types of cryptocurrencies. As I mentioned, they have different functions. There's some decentralized finance applications. There's NFTs that a lot of people are talking about, and there's also smart contracts, right? So there are digital functions that the blockchain can facilitate to, again, eliminate the need for that third-party intermediary. So when we talk about Bitcoin and blockchain, how does it actually work? How do we actually get away with doing this without that third party? Well, when it comes to Bitcoin, if you see here on the chart, a new transaction is entered, okay? And then it's transmitted to a network of peer-to-peer computers across the world. Okay, that's actually one of the reasons why the network is secured, because it's not really hackable in the same way that your personal computer would be, or a private corporation where somebody can penetrate one computer and pull the system down, right? Bitcoin's strength comes from the fact that there's computers all over the globe that are processing to make sure it's secure. And then the network of the computers solve a particular equation, right? And that actually goes into what they call blocks, okay? And then these blocks are chained together and they create a long history of permanent transactions, and then the transaction's complete. So you have this blockchain system that's supported by people and computers all across the globe that ultimately facilitate the transactions. Okay, I wonder where this line came from here. Why that's on the screen. So if we take blockchain and we say, okay, what is it? What are these blocks? And we look at these, a book analogy, okay? In a generic sense, the blockchain is like a super high level database. But if we use a book analogy, the blockchain itself would be the book, right? Each block of data on the blockchain would be the page in a book, right? And each entry on that page would be the blockchain transaction, right? So that just helps give you some behind the scenes idea on how it works in terms of it being a mechanism, how that actually functions. Okay, and then as it relates to the blockchain variations, again, it can be public or private. We can talk about how the transactions are verified. There's a variety of different ways that blockchains work, whether it's proof of work and proof of stake, and that's a whole nother rabbit hole to go down. But for now, it's just important to know that there are different ways and methodologies that various blockchains or cryptocurrencies can verify their transactions and actually do what they do. And it's an ever evolving space across the board. So Bitcoin, the coin everybody wants to know about. Again, I mentioned Satoshi Nakamoto. Anybody that's deep in Bitcoin should know that name. The white paper that established the protocols and the idea for Bitcoin was published under that name. Nobody really knows who it is, which also contributes to its decentralized nature, because there's no one person that you can go to or pinpoint to say, okay, this person controls all the Bitcoin in the world, or they made it. Nobody really knows. And again, it was launched in 2009. It's distributed and traded all across the globe right now. It's actually taken on a shape of being a store of value. Many corporations, and there's probably a slide on this as well, have started to take it on as a treasury reserve asset to specifically be a hedge against inflation. So for those that are kind of wondering, like, is this something on the fringe that, you know, I'm too late to the party on or too early? You know, you're in the sweet spot now, because it's really becoming established as, you know, an alternative to gold, an inflationary hedge, and a general store of value. Looking at the next slide, but it is volatile. Okay. Now, just to get to the point, how much money can I make? Can you make generational wealth? If you look at the price history in March of 2020, one Bitcoin was $3,900. Okay. In May of 2021, it hit $69,000. Right. I'm not aware of any asset class on the planet that gives you those types of returns. Okay. And this is not abnormal. Okay. If you look over the 10-year history of Bitcoin, this type of gain happens all the time. Right. So if you look at here at some of the price history, you can just see the waves up and down, the different crashes. You'll see, big pumps, 1,000% pumps, and then 80% declines, 50% declines. It's not abnormal. Okay. That is the space, but that's why you have to learn how to look at the charts and follow the trends so that you're not buying the peaks and selling the bottoms, right? Everybody has heard buy low, sell high. But our emotions cause us to do the opposite, right? When we're starting to invest and we hear it's going up, when we hear everybody's making money and this person just bought a car, this person just bought a house, we have a fear of missing out. So then we start buying the tops, right? But then the people that were buying the bottom start selling, they crash the price, and now you're left holding it back. So we have to learn how to be non-emotional about the trading and understand that that type of volatility exists in the space. Okay, so when we go back to how much could you have made, we just mentioned that $3,900 per Bitcoin was all it costed back around the COVID low in March of 2020. So if you had just $10,000, right, and most working people can maybe come up with that amount of cash, you would have had 2.564 Bitcoin, give or take. All right, you take that times 69,000, your $10,000 investment would have come out to be about $176,000 in 1 year, right? Where can you turn $10,000 into $176,000? Like, it just doesn't happen. This is a once in a lifetime opportunity to build wealth. And the funny thing is that return of 1,769% was actually dwarfed by many of the altcoins. See, everybody talks about Bitcoin because it is the first mover, if you will. Right, it's the Napster, if you will, of the digital token space, the first one to get out there and do it. It's certainly the largest by market cap. Market cap meaning how much money is actually moving through the coin, right? The amount of value per coin times the coins in existence. So it most certainly is the largest coin in the space. But it is dwarfed in terms of its percentage returns, right? The altcoins give you much more return. It's not that much different from your regular stocks, right? You may have established stocks that may go up 5%, 10%, or maybe 20%, but then you might have penny stocks that shoot up hundreds of percent, right? Low liquidity assets tend to jump faster than the higher liquidity assets. So, where am I pulling this from? Case in point, if you look in 2017, the 2017 bull run, Ripple, which is now called XRP, there was some confusion between Ripple, the company, and the XRP token that they operate. It increased about 1,515%, moving from 21 cents to $3 in the last 4 weeks of 2017. Okay, now you heard me in the beginning say that I got into the space around the summer of 2017. I bought XRP around July at 15 cents. And then by the time, I got my feet wet, $50, $100, just trying to learn the space. Back then, I wasn't even sure if I could pull my money out of Coinbase or some of these other platforms to get it back into my account. So I had to test the waters, right? So I say that so that you guys understand, as you're getting into the space, it's okay if you do that too. Nobody says you have to pour a bunch of money in there. It's all right to start with $20, right? Some people don't even know you can buy a part of a Bitcoin. You don't have to spend $69,000 or $30 or $30,000, whatever it's trading at. You can buy $100 of Bitcoin, okay? But then after I got comfortable and I did my research, I did something very bold. Right, come September, October 2017, I took all the money that I had to my name and I put it in the Ripple XRP. And it turned out to be a very good play. And to this day, I keep about 95% of my liquid net worth in crypto. Now, I like the risk, right? I like the potential for gains, right? Not suggesting you do what I do. It's probably a bad idea for anybody to put their 98% of the liquid net worth into crypto right now. I've been doing it a while. My entries are also very different, right? I've actually made exits and repurchased coin at 50, 60, 70, 80% cheaper than when I last sold it. So I'm in a very different position than anybody listening. So I want to put that out there so nobody hangs up this call going, wait, I got to go put 95% of my net worth into crypto. No, that's not what I'm saying, right? That's just what I did and how I ended up positioned. But those gains are so significant. See, I got in halfway through the summer at around 15 cents. But if you look at the charts, you'll see that XRP in particular was less than 1 penny in January of 2017. So when you go from less than 1 penny to over $3, that was like 30,000% of gains in 1 year for somebody that was lucky enough to get into it in the beginning of 2017. So can you make life-changing, generational changing wealth? Absolutely, right? The question is, can you pick the right coin? Can you get in at the right time? Can you exit at the right time, right? And do you have the risk tolerance and the level of liquidity necessary to continue to buy the decline, or at least let your money sit there for potentially for a few years, right? Because I bought the bear market from 2017 all the way through to 2020, 2021, right? When nobody wanted it, right? And that's, there's running memes all over social media where people will have pictures lined up of folks trying to bang down doors to buy crypto or Bitcoin at $69,000, but then an empty line when it was at $3,000. So people were too scared to make the purchase. So, what are the altcoins? You might have heard that phrase, well, Bitcoin and altcoins. Altcoins are essentially everything else besides Bitcoin. Okay, Bitcoin's the granddaddy. That's the first one. Okay, so if somebody's talking about altcoins, they're talking about the thousands of other coins in existence. Now, for a time, that also included Ethereum. Okay, Ethereum is a blockchain that does a lot of smart contracts, right? And what a smart contract is consider it an operation, a digital operation that says if this, then that, right? It'll facilitate certain transactions without that third-party intermediary, and people can build a lot of things on Ethereum. It's grown so much that it is now the second largest cryptocurrency in the world at the moment, and it's kind of swelled in value alongside Bitcoin over the last year. So it's often excluded in conversation from the altcoin category, where people will just talk about Bitcoin and then Ethereum kind of stands on its own, and then altcoins are everything else, which are thousands of coins. Now, some examples, I just have a few on the screen here. It's by no means exhaustive because there literally are thousands and thousands of coins, but XRP, it's kind of pushed by the company Ripple. Their focus is cross-border payments, okay? Why does that matter? I look at use case. Prior to blockchain and some of the new technologies, the quickest way to get $10,000 or $100,000 from here in the US to London was to literally put it on a plane and fly it there, right? And that's ridiculous in a time where we can send digital emails and texts across the world. That's the fastest way to move money, right? Because if you've transferred money internationally, you have to go through the SWIFT system, right? It may take a few days or weeks to go through correspondent banks to move around the globe. The costs may not be totally clear. Ripple XRP cross-border payments, time it took me to snap my fingers, my money is now in Africa or London or anywhere across the globe. And that is a great saving. So use case, that's why I invested in that particular coin. Dash is a privacy coin. Okay, VeChain, VET is a supply chain management coin, right? That is put forth by an organization that has real partnerships like Walmart China, where they're tracking the products that they're buying and selling through the blockchain, right? So this is not entirely dissimilar from how you might evaluate corporations and businesses, right? And in terms of investment opportunities, what problem is this company trying to solve, right? So likewise, we look at the coins and say, okay, well, what problem is this coin trying to solve, right? If it doesn't make sense to me, I don't really buy it, right? So people are like calling me, well, what about Dogecoin? What about Shiba? Well, what does it do? Right? It's a meme coin, right? If it doesn't have a real use case or real purpose, I don't buy it. That doesn't mean you can't make money on it, because Shiba and Doge have made millionaires, maybe billionaires, right? But it doesn't speak to me, and it's not a risk I'm willing to take, because to me, without a true use case, it's more susceptible to pump and dump schemes, people pumping a lot of money into it, then it crashing, right? And maybe some of you on the call have had that experience where you got excited, you're hearing about Shiba Inu and Doge, and you're buying it because everybody's talking about it, and then the second you buy it, then it crashes, right? And so you have to be mindful of those patterns, right? Bitcoin Cash is another older coin. It's a fork of the original Bitcoin blockchain. Aave is focused on decentralized finance. Filecoin is a decentralized peer-to-peer file storage network, right? So I kind of had these up here just as a handful of different coins to give you an idea that there are more coins out there than Bitcoin, and they have very different purposes and very different use cases that can lend itself to more or less value, if you will, fundamentally or otherwise. So where can you buy or access cryptocurrency? There's a lot of different platforms. You have to be very, very, very careful which platforms you go on to. Some of them are very shady and on the fringe. Nowadays, there are more and more regulated platforms. These are the ones that I trust, right? But by all means, do your own research and see what works for you. But Coinbase is a strong one, Binance US, Uphold. And if you're a business owner, and you're looking at accepting crypto and things, circle.com is a nice professional platform for businesses. Now, why I would choose one or the other: ease of use, coin selection, security, trading features, and purpose. What does that mean, right? First of all, when it comes to security, one of the things you have to realize with crypto is when you're trading money on the exchanges, although the money is yours in a sense, you don't control it, right? There's an idea in crypto that unless you have your quote unquote keys, right, it's not your coin, right? Your keys, your cryptographic keys are something special. It's like your combination lock to your coin. And if you don't have those keys and you just have a password to the exchange really controls your money, which means they can freeze your account, right? If the exchange gets hacked, you can lose your coin. Right? If the website goes down, you won't be able to retrieve it, right? So there are certain risks inherent in keeping your money on the exchange if you're not actively trading. So from a security standpoint, if you have 3 or 4 or 2 or 3 exchanges, you can spread that risk across the exchanges, whereby one exchange going down doesn't cripple you because you've spread your money across a couple different ones, right? Sometimes they go down temporarily when the market gets very hot and prices are skyrocketing or crashing very fast, right? And everybody's trying to get online. Sometimes the website will crash and go down, right? So if you have one website that's down, maybe you can still access the other one to make some key trades, whether that's moving money into the space or taking money out or changing your positions. So from a security standpoint, that's good. From a trading features platform, it matters. Coinbase, the client-facing, regular retail-facing website is very easy. Point and click, it's on your phone, it's intuitive, but they also offer a Coinbase Pro platform that allows you to do more advanced trading like limit orders, right? Where you can place an order and let it execute on its own without having to sit in front of the computer waiting for it to hit your price. Binance US has similar features. Uphold is actually one of the only major exchanges that still sells Ripple XRP. For those that don't know, Ripple is being sued by the SEC right now because there's a big fight as to whether or not XRP is a security or not, which caused it to be delisted from many of the exchanges, right? So that's also something that you have to keep in the back of your mind when you're dealing with crypto in general is regulatory risk, right? What is the SEC going to do? What are other governments going to do when it comes to crypto, and how can that impact my portfolio? And how does that impact my risk tolerance and what I decide is the appropriate level of risk or too much risk as it relates to the allocation of my overall portfolio? How do I choose which digital assets to buy? For me, I look at mainly 2 approaches, which are not very special and unique to me, I should say. Fundamental analysis and technical analysis, right? Some of what we've been speaking about today is really fundamental analysis, which is defined as a method of measuring a security's intrinsic value by examining related economic and financial factors. And it should include, in my view, things like the project's use case and their core team, right? If you were investing in a startup company, you'd want to know who's running it, right? Because they don't have a track record, they're brand new, right? That leadership team may lend credibility to the project and make you feel comfortable investing. Likewise, many of these coins have teams of developers or people or entities pushing it that might make you feel a little bit more comfortable in their ability to succeed on their mission, on their white paper, or on their use case. Technical analysis is also critical. For those that don't know, it's a trading discipline employed to evaluate investments and identify trading opportunities and price trends and patterns seen on charts. It can be used as an indicator of future price movements. And then, using those in tandem with one another is ultimately how I trade. Some people will say, the heck with the fundamentals, they're all about the charts. I don't believe in that. I believe that you have to pay attention to why the coin exists, who the leadership team is, the macroeconomic factors, right? Whether the U.S. government is going to continue to print money, whether there's a correlation between Bitcoin and the stock market. There's a lot of fundamental things that I would consider in addition to specifically what the pricing activity is doing on the charts. And in my personal opinion, it's a mistake to make investment decisions in the long-term base or long or medium term based solely on one or the other. I look at them in tandem. Some people like to weight their portfolios by market cap. You heard me say Bitcoin is the largest coin in the space. It fluctuates in terms of how much it is compared to the rest of the space. Maybe one day it's 40% of the overall cryptocurrency asset class. So what an individual or a fund might do is allocate 40% of their crypto holdings to Bitcoin because it represents 40% of the overall fund, right? Or the overall space. And likewise, if Ethereum was 20%, they might put 20% in their portfolio. So there are different ways to create an allocation that works for you. I don't go by weighting. I enjoy the risk, right? I want to make as much money as possible. So I will take on as much calculated risk as I possibly can. And I won't stay the safe route by just investing with Bitcoin, right? As I speak to you, 98% of my cryptocurrency holdings are in altcoins. Only 2% of it is in Bitcoin. That's partially because I want the bigger gains that the altcoins can bring me, but it's also because I think that Bitcoin is essentially shot in the short term, right? I think Bitcoin's going into a bear market, and I think that the altcoins will rebound. At least that's what history has shown. So time will tell whether that actually continues or whether we see something different this time. But no matter which approach you take, or if that's too complicated to sort through, my general suggestions are to follow the money, but don't chase the run-ups. Okay, so let me kind of define that a little bit. If we look at the market cap of the overall crypto asset class, we can see that most of the money is in Bitcoin, right? We can read the articles and see that many corporations and governments and such are starting to invest in Bitcoin. They're building rails and infrastructure for Bitcoin, right? So if I don't know what's going on and I don't have the time to research, right, Bitcoin, if I'm willing to hold it long enough, can be a very safe place to leave my money, because that's where the bulk of the money is going. But when I say don't chase the run-ups, what that means is if Bitcoin and we'll see in a minute what it's trading at, but if it's trading at $37,000, $38,000 today, and you're afraid to buy it, and then it shoots up to $60,000 like in 2 days, which is not impossible. This sort of thing happens in the space, right? Chasing the run-up is going, oh, it just went from 30,000 to 60,000. I got to go buy before it goes higher, right? And then 8 times out of 10, you go buy it before it goes higher. And then what happens? It crashes, right? Because you chase the run-up, right? The objective is to buy low, sell high, not the other way around. And I always tell people, think about it as if you were going to the mall or the store, or you were going to buy a car. You're not going to walk into the dealership, right, or the mall and say, hey, I want to buy this particular product at the highest price possible. Okay, you want to get a discount. You want the sale, right? So I look at these rapid declines in crypto as a sale, right? As if I have an opportunity to buy it at a discount. I don't want it when it's at a premium. I want it selling I want to buy it when it's selling at a discount. Okay, so where can you find more information on crypto? Here are just a few websites that I recommend you guys make note of. CoinMarketCap is one. That's where you can go to see a variety of market cap holdings, different coins. I'll bring that up on the screen in a second. TradingView.com, I'll bring that up as well. That's where we can see some chart action. If you really want to read the charts and figure out what's going on, this is a free platform that you can use. They're both free. We've formed actually a private chat group that is an opportunity for people to share articles, information, trading strategies. When the market crashes, sometimes it becomes a support group where people go on there and complain a little bit about the market crashing, but we learn from each other. Another resource is blockchaincouncil.org. There were some certifications that you heard that I got from there. It's a nice place to get some information. I've started to build a relationship with them, and if we get enough members interested in taking courses, then I can negotiate some discounted rates. So that's something to keep in mind. And then also internet articles and YouTube videos. There is a wealth of information out there, a lot of quality YouTubers that are putting forth great content to help you understand, where the market is and help you kind of zero in on what investment strategy might make the most sense for you. So when it comes to the market and where it's going, all we can do is make inferences based on what the charts say now and the historic price action or activity that we've seen. And what typically happens in cryptocurrency is that Bitcoin will go on a bullish tear, okay? And then it will crash. And right before it finishes its crashing structure, if anybody's familiar with Elliott wave theory, it will go through what's known as an ABC correction, right? An A wave down, okay, a B wave back up, retracing about 75% of the decline in price, and then another C leg back down. So price doesn't go up or down in a straight line, there's fluctuations, right? So what typically happens in Bitcoin and crypto is when Bitcoin has topped out, right? If we assume Bitcoin has topped out at 69,000 and the bottom is in and it's crashed to around 30, the short-term bottom's in around 30, low 30,000s, then you can anticipate that Bitcoin might creep back up to 52,000, 50,000, 55,000, somewhere in there. Potentially not set a new all-time high, roll over and crash, right? But what history shows is that the altcoins generally on that final leg up for Bitcoin, right? As Bitcoin is retracing in this example from the 30,000 range back to the 50,000 range, right? That the altcoins would start firing and start generating those massive gains, right? That's why I'm sitting, one of the reasons why I'm sitting in the altcoins. And one of the things that I'm going to show you on the charts is it really zeroes in on the idea of buying low and selling high, right? I'll show you some Fibonacci pulls that will help identify that Bitcoin's kind of run its last leg, or, you know, at least in this cycle, right? So why would I want to buy something that might give me 20, 30, 40% gains, in this case, Bitcoin, just to get back to 55,000, when I can buy some coins that are still at 80 or 90% of the bull market tops that they had in 2017? Right? So I don't want 50% gains. That might be great in the stock market. I want 1,000% gains, right? So that's another reason why I'm in the alts. And when you look at the charts, it becomes very clear. So that's where we're going to go. Any questions on any of that before I start jumping to some things that I have on the internet? Nothing in the chat.
There are no questions in the chat at this
Can we
time.
unmute? Oh, yeah, I think we can. Can you guys hear me?
Yes, I can hear you.
Mr. Hawkins, hi. Thank you for providing that very descriptive coin presentation. I was looking at your altcoins and didn't notice Cardano. I don't know if you did mention ADA as part of your alt holdings.
No, I didn't mention it. That is a very prominent coin. It's a solid project. It's been around a while. I don't have a negative thing to say about it. It's just not one of the ones that I chose to include in my portfolio. And since you mentioned that point, I will make crystal clear that just because I don't own it, it doesn't mean it's not a great project or that you can't make money on it. There's a lot of solid projects out there. So I tell people not to just buy what I buy, but if you look at this presentation or several of the other presentations that we've done that really dug into trading, I try to give folks the tools to help them discern which project speaks to them, right? So if you like ADA, hey, Matt, more power to you. I don't have anything negative to say about that project.
Right. The other question I had quickly was you spoke about the ABC fluctuation in terms of Bitcoin. Where and I haven't really been following to that extent. Where are we on that structure? Are we creeping back up at the B or the C? I'm not too sure, because
So
I know we had topped down at the bottom, low 20s. I mean low 30s
right.
on that first drop.
Right. So in my opinion, as it relates to Bitcoin, we are in the B wave back up, right? Look, it's always possible that we just careen down, but it looks to me as if we're in the B wave back up, starting that final retracement, which should get the altcoins firing, and then hopefully altcoin season will start. If I can get this PowerPoint off the screen, then I will bring the other one up. I may have to stop sharing to do it. Give me 1 second. Let's see.
Also, one question was, could you show the portfolio again, please?
That was actually not my whole portfolio. That was just some coins that I used as an example. Give me 1 second here. If I can get out of this presentation mode. Okay, did that finally come down?
No, we don't see your screen.
Okay, good, because I'm trying to take the presentation off and load the website.
Okay.
There we go. All right, now I'll go back to share screen. Okay. Can everybody see this coming up now?
Not at the moment.
Share. Should be
Okay.
coming.
Yeah, it's loading.
Okay, all right. So before I jump into the charts, I just want to give you this, and I'm going to come back to my portfolio in a second. And actually, I freely share my portfolio in our chat group. I post it all the time, so I'll definitely go back into that. Just want to show you a website here. This is essential to anybody that's really paying attention to crypto. So this is coinmarketcap.com. Okay, it's one of the older websites. Just about every coin in existence can be found on this website. And it's a great place to start when you're trying to figure out if you want to invest and what you want to do. If you look at the top of the page, right, you'll see that this market cap here. What that means is that this market cap represents the total amount of money infused into the entire cryptocurrency asset class right now. So as I'm talking to you, let's see, we got 100,000, million, billion. So we got 1,692,000,000 some odd dollars, right, inside of all of crypto right now. Okay, Bitcoin represents 41.8% of that market cap right now. Okay, Ethereum represents 18% of that overall market cap right now. You'll notice they don't have any other coins singled out besides these two up here, right? Those become the big ones, right? And everything, and then there's everything else, right? So it's like Bitcoin, Ethereum, everything else, right? So those are the big ones. Now, what you do is if you scroll down here and you look at the screen, you'll see all the coins in order, right, of their market cap, right? You'll see the price of their coin, right? And for those that don't know how to calculate market cap, essentially what you do is you take the price per coin and you multiply it by the supply, right? Just like you would stocks, right? This is the cost of each stock per share times the amount of stocks in circulation, right? So cost per coin times your circulating supply should give you your market cap, right? Now, sometimes they calculate it a little bit differently, you know, in terms of how many coins are actually in circulation versus in existence, right? So there can be a little bit of play on there, but generically, you're looking at the price times the coins in circulation gives you your overall market cap. And that's how this is ranked. And you can see how much of a divide there is, right? $707 billion in Bitcoin compared to 310 billion in Ethereum, right? Tether's a stable coin. It's pegged to the value of $1. So I just disregard that. BNB is a token on Binance Exchange. Okay, it's an exchange coin. USDC is a stable coin. You know, when I do look at things like Tether with that amount of money and USD coin and this amount of money, sometimes people park their money there when they don't want to put it back in the bank, but they leave it on an exchange. So this to me is money that's deployable, right? So when people start feeling safe again, this money should shift into some of the altcoins, unless somebody is on a website or a trading platform where they're gaining yield, interest on their stable coins. But you look down here, there's hundreds and hundreds and hundreds of coins. Like the list goes on and on and on and on and on. You want to be very careful investing in coins that are way down the bottom. I'm not saying that you shouldn't, because if you've done the research and you know it has a good use case, maybe you're getting into a coin or a project that has great potential before anybody sees it, and you become the next billionaire, right? But just be aware that the further down the list you go, the lower that market cap becomes, right? So look here, $579 million market cap. That's a far cry from the billions of dollars of the ones up top, right? So what that means is if there's whales, people that are heavily funded or heavily capitalized that can come in here and drive the price up, right? And they'll drive it up real high. They'll play around with the math, right, in the charts. And some retail investor will go, oh, it's going up. I don't want to miss out. fear of missing out, FOMO. They'll FOMO into the coin, they'll buy it, right? And then after they run the price up and retail comes in, then they'll sell it and dump it, and retail will be sitting there holding the bag, right? And then what makes it worse is that retail, after they lose half of their money, they'll be upset and sell. Somebody will come pump the price again, and they go buy it back higher again, right? Thinking that it's going to go back up, and the cycle repeats, right? So you got to be very careful of pump and dump schemes buying down here, further down the list. But this is a great place to start. Now, when you're trying to get information about the coin, VeChain is one I talked about. If you click on the coin, right, not only can you see the price it's trading at, but it gives you a lot of base information about the project, right? Often if you come up here, there'll be a website to the developers, you know, whatever is the main organization that is pushing the development on the website. You can come up here and go research some more on them. Most coins will have a white paper that kind of in one simple breath expresses what they are there to do and what their mission is, right? What they're all about. That can be found here. You have market. If you click market tab, you can find all the exchanges where that coin is actually being sold. Okay, so this is a great place to start. Historical data can also be found here, and a lot of other information. So I encourage you to kind of visit this site, click around, you know, and use this as part of your thought process or data gathering, if you will, when you're trying to decide what coin you want to invest in. TradingView, another free platform. You can pay for it to get more features. But this is really where the rubber meets the road for me in terms of chart analyzation and where we are in the process. Somebody said, well, you know, where are we in the count? Where are we in the market cycle? So let's bring up Bitcoin. I use a lot of different trading features. They're not all necessary. Let me just clear some of this stuff off. We have videos where we go over in our chat group, you know, how we actually use this platform. So I'll save that for another day and just kind of get to the point. If you look right here, right at this point here, this is December of 2017. That's where Bitcoin topped out at about 19,760, roughly $20,000. Okay, from here it crashed 84% all the way down to $3,000, give or take. Right, our COVID low is right here in March of 2020, right around 3,700. Okay, so if you had bought in the COVID low when everybody said it was going to zero, right? Or you had bought it here when everybody said it was going to zero, and you rode it all the way up, you would have made that 1,500% that we talked about earlier in the slides. Okay, so now why, you know, using the trading tools, why would I get in or out of a position? Okay, this is something called a Fibonacci retracement, and this is so easy. It, you know, it doesn't require degrees or anything else, and it does have some complexity. I don't want to oversimplify it, but often in crypto, the coins will run the full Fibonacci extension close to or at the 4.236 extension, right? That I just put a chart tool on it, brought it from here up here. Sometimes they exceed it, sometimes they don't quite make it, right? But there's a tendency for it to come up here. So what I was saying when it came to Bitcoin versus the altcoins, and I'm going to make this case to you before we hang up the call. If we assume that the top is in, or even if the top isn't in, let's say I'm wrong and the top isn't in, and it's going to make a full extension all the way up here. That's 100% gain. That might make many of you very happy, and that's okay if it does, right? But keep that in the back of your mind that if we, or better yet, some of you have been reading the news. Let's be even more bullish. Let's say that you're buying into the hype, which I don't, that we're going to hit $100,000 in a short time. I believe we'll get there eventually, but not anytime soon. Let's say you get up to $100,000. That's 170%. So just keep that in the back of your mind as we go through this. Your max possibility based on the more bullish counts that people are putting out there is $100,000, 170%. That's if Bitcoin goes from here to here, right? I don't think it'll do it, but let's just say I'm wrong and it'll go here, right? That's what you're looking at. But I also want you to look at what Bitcoin has done. I'm going to put the same tool on some other coins. If we draw this line here to here, Bitcoin has come all the way up and it's hit the what's known as a 3618. Let me zoom in on that a little bit so you can see it. Okay, you see Bitcoin came all the way up here to the 3618 and it broke it. Okay, let's look at Ethereum, right? Because we talked about how Bitcoin and Ethereum were kind of discussed together and then everything else. What did Ethereum do? Let's find out. Here we go. It's already set up. I got all these drawing tools. So look at Ethereum. Ethereum didn't quite make it to the 3618 yet. okay? But it did break the 2618. So we got Bitcoin that broke the 3618, Ethereum broke the 2618, okay? Now let's look at the percentage gains and declines. This is 2017 or 18, January 2007, January 18, December 2017. What was the initial crash? 94%, right? And I'm showing you this, I'm gonna make the case, but I also want you to understand the nuance of not buying into the hype, because right around here, people were thinking it's going to the moon, right? Same thing with me. When I first got into space, I bought XRP all the way over here, right? Rode it all the way up to here. And even though I was in it back here, I was up here thinking we're still going to keep going higher. It's never going to stop, right? That's euphoria. Then what happens? Boom, 94% of your money gone. So if you're somebody buying the hype up here, this is what's in store for you, right? You have to reverse your thinking. If you're fundamentally in a coin that has staying power and a use case that you believe in, right, then you shouldn't have, at least me, I don't have a problem buying this, right? Because I believe I'm in a project that's going to last. And I understand that there's only three ways the market can go, up, down, or sideways, right? So if I buy this crash, what comes next? Either sideways action or up, right? So if you had bought the crash all the way down to the bottom, right, on Ethereum, where are you going? Right here, 5,891% gains, right? So now, again, I'm going to go to some altcoins now, but I want you to sear this into your brain. Ethereum, going from the swing high to the swing low on a Fibonacci retracement, it broke what's known as the 2618 Fibonacci threshold. Bitcoin broke the 3618 Fibonacci threshold. Let's look at XRP. Where is XRP now? And I'm going to come back to that question on where we are in the count. I didn't forget that. So if we do the same thing on XRP, XRP is all the way down here, right? If it does the same thing that Ethereum did before the bull runs over, right? Where are we at now? 1,200% gains still available, right? If it goes all the way up to the 3618, like Bitcoin did, oops, here we go. If it does the same thing that Bitcoin did and goes to the 3618, that's 1,706%, right? Let's look at Bitcoin Cash. And look, there's no guarantee that these coins will do it, but historically, until the market shows me that something different has happened, the only thing I can do is assume that it's going to do some variation of what it's done before, right? So if we look at Bitcoin Cash, same thing. Bitcoin Cash is all the way down here. If it goes up to the 2618, 3,377%. If it goes to the 2618, 4,924%. Right? Let's throw all that out the window and say it just does a little bit and it comes up to the top of this peak here. It's still 154%. If it goes up to the 50, you're looking at 500, 600%. So for me, I'm playing the odds. I'm looking at the altcoins in history and I'm asking myself, why would I want to stay in Bitcoin right now? Right? Why would I want to stay in Bitcoin right now to go from here up to 100,000, which is the most bullish case out there now in the short term, right? For 100 some odd percent. And it probably wouldn't even break this up here. So why would I want to go for 100% when I can come over here and go?
Quick video just to show you.
What was that? Was that a question?
Sorry.
It's okay. So, I'm trying to show you that there's a lot of room in the altcoins and generally they fire. So back to the question of where we are in the Bitcoin count. Let's see. Let me clear this off. Now, I should also point out that you can look at these things in the weekly or the monthly view, to get a different look at the chart. It tends to look a little different when you put it in weekly view or monthly view. Let's see. This is 2017. So I believe that we completed something here, right? So if we completed something up here, typically, depending on how you look at the charts, let's see, you'll have some sort of an ABC correction, something you'll A wave down, B wave up, C wave back down, right? You'll have something like that occur in the market, okay? So if this was our top here, Okay, what I believe is that we're in this B retracement. Right now, remember, it doesn't go in a straight line, right? It's not that it's going to come straight up. There can be chop, right? It can go sideways and it can still go down. But what I'm thinking is that the short-term bottom is in, and we will see something like this. Maybe it comes up to here in the 50s, and then we come down. Now, whether it stops here, whether it comes all the way down to this support, right, is yet to be seen, right? And it's not by accident where the prices stop, right? So if you look, let me just move this here for a second. If you look at this chart here, why did the price stop here? Right? If you look left, anytime you look at a chart, look left and see what you find. Right? There's a cluster of price activity here. Right? The red candles mean sell, the green candles mean buy. Right? And these little wicks is where the price stopped and got pushed up. Okay. So if I look here and I draw a little line to see, okay, well, why did it stop there? Right? I look left, I see price activity here. So if I was a trader or a day trader or a swing trader or something, I might have had a buy order here, right? Sitting here. Why? Because that's where the support structure was. On the way up, that can become resistance, right? You got to break through it. If you get through it and you come down on top of it, it can become support. So I might have had a buy order here, right? And then I might have had a sell order here, right? Why? Because if you look left, you can see that the price action stopped in there. Let me zoom in a little bit. And then I want to see if we have questions before I ramble too long. So again, here.
We do. We have a couple of questions.
Okay, go ahead.
Are you able to sell and convert to cash if you wanted to pull out?
Absolutely. Now, that actually depends on what trading platform you're using. Every cryptocurrency platform does not offer fiat on-ramps, meaning that every crypto trading platform does not utilize US dollars. Okay, the ones that I put up there relative to Uphold, Binance US, and Coinbase, you do have the ability to sync your bank accounts with them. And you can convert from crypto to cash right on that platform and send the money back and forth to your bank. But every platform does not afford itself fiat on-ramps, which is why the stable coins like USDC or Tether become important, because they're a proxy for the dollar. They're pegged to the value of a dollar. So if you want to get away from the volatility and put your money on something safe on an exchange that doesn't use US dollars, then that's where you would park your money.
Okay, and then our next question is, how prevalent is scamming or schemes? Any red flags to look for?
Yeah, there's schemes and scamming all over the place. Don't buy into any, or let me rephrase that. Don't fall for any of the traps where somebody says, send me like 0.5 Bitcoin and I'll send you 0.8 Bitcoin back, right? Scams, don't do that, right? Phishing scams happen all the time, right? You'll get an email from, and some of you may have experienced this in your daily lives already. You get an email from someone or something purporting to be someone or something you do business with, but it's not really them. Right? If you take your mouse and you hover over that email address, although it may say Deborah Green, right, facially, if you hover over that email address, it'll have a totally different email address that actually comes up underneath that name, right? So you have to be very cautious not to enter your information into emails and things that you get. So if I get an alert from Coinbase or some exchange, unless I know it's something that I'm expecting, right, or it has a phishing code in it that I recognize to show me that it's real, I won't click on the links in those emails. I'll go directly to the platform, right? If I get an alert from Coinbase, or whether it's Fidelity or TD Ameritrade or Vanguard, I don't care, right? If it's a real alert, I don't have to click the email. I can log in directly to the platform and go to my message center and find it, right? That eliminates the entire risk of having to click on something that may or may not be your stuff, right? We've had a member in our chat group already that had clicked on a similar link and went to a website that looked like the one that he thought it was, and he entered in his password and everything. And within minutes, he started getting alerts that his money was being transferred and sold and everything. And he lost all that money, right? So you have to make sure that you're on the platform that you think you're on. Don't click on random emails that come. Don't give anybody your password. Utilize two-factor authentication when you're using these exchanges, which means that you need more than just your password to get in, right? Maybe you have to have a code generated from some type of a Google program or Duo program where they generate a random code every time you log in. Maybe you have to get a text message to your phone or your email as a companion to your standard password, right? Maybe you have to have a couple checkpoints happen where you have quote unquote whitelisted wallets where your exchange account is set up where you can only transfer money to certain accounts unless you have to wait 48 hours to add a new wallet address, right? There's a lot of layered protections that you can put in to make it much more difficult for somebody to steal your coin or your money.
Okay, excellent. Next question is, what is a good rule of thumb to analyze if a coin has good utilization for future use?
I would say whether it makes, think about your regular life, right? And things around you, right? What makes sense to you? What would you use, right? If I see something like I understood XRP, Ripple XRP early on because I understood the SWIFT system and transferring money across the globe. I said, wow, that makes sense to me, right? As I sit here speaking to you, even though they're under SEC attack, right? And this is me liking risk, right? And it's going to pay off beautifully if I'm right. XRP is over 50% of my portfolio right now. Okay. VeChain Vet is another coin that's about 20% of my portfolio, right? Maybe it's a little less, I got to check. But that's supply chain management. I look at the fact that they have real partners, Walmart China, right? Other major corporations that are actually using their blockchain to track the shipment of goods across the globe, right? So when I see things that make sense to me, right, and solve a use case that I can understand, then that's what interests me. So when I would suggest that, maybe you don't do those. Maybe that doesn't speak to you. Maybe you're an internet expert and you're understanding internet marketing or how people charge for services on the web. And there's a coin that has something to do with that, and it's speaking your language and makes sense to you, right? Then by all means have at it, right? But I think at the end of the day, fundamentally, right, I'm looking at is it solving a real problem in the world today? Can I understand that problem enough to make me feel comfortable, right, to invest in it because I think what they're doing is a valid solution, right? Now, not to steer anybody towards coins that are horrible, but you can make money on coins that are horrible, right? I don't like Shiba or Doge, but people bought those. There's been plenty of coins that I've bought over the years that had no use case. Right? Bitcoin Cash, to me, is another example of a coin that really doesn't have a viable use case. It's a fork of the original Bitcoin blockchain. It's supposed to be a little bit faster. It has a high market cap relative to a lot of the thousands of other coins on there, but it's not really solving a real problem to me. So you might say, well, Eldridge, why did you buy it if it's not solving a real problem to you? Well, because the fundamentals overrode that concern for me. Right? There's very few coins that are on almost every single exchange known to man relative to cryptocurrency. Bitcoin Cash is one of them, right? When you look at PayPal or any of these new systems that are coming online, giving access to retail, right? To buy, right? Where the on-ramps are for capital, right? Bitcoin Cash is usually one of them, right? So I'm sitting there going, okay, well, it's trading at 70, 80, 90% of its value from the previous all-time high. It's set up so that money can come from everywhere and flow into it. Major funds have trusts for it or allocations for Bitcoin Cash. So I'm going to have an allocation there, right? So that I don't plan on keeping it forever, right? But I think there's a good chance that there might be inflows there. So I want to have it as part of my portfolio, right? I have a little bit of Aave in my portfolio, decentralized finance, a little exposure to that space, right? Different way of lending and making money, right? I have a little bit of Dash, privacy coin. People value privacy, right? A lot of people use cash because they don't want people to know what they're doing with their transactions, right? So there is a value for the privacy coins as well. So long-winded explanation to say, fundamentally, use case, what problem are they trying to solve? Can you understand it? Does it make sense to you? And do you think that their team and what they're putting together can actually solve that problem? And is it just an idea, right? Are you buying into the white paper of the hype, or do they actually have real clients, right? Have they actually applied this in real life, right? And have a working model of this to show proof of concept?
Okay, and I think this is a two-part question, and I think you probably answered the first part already. Is there a cluster of coins involved in these projects or movements? For example, NFT projects, Delphi, and blockchain projects, to name a few. And did you discuss wallets as a means of keeping your coins safe?
So I didn't talk about wallets, and I can. So there are a lot of coins that do different things, right? NFTs are one of them, right? People like maybe Solana. There's different coins that are not having NFTs. And for those that don't know, NFT stands for non-fungible token, right? It's a different way to transfer original things. Like people might have art that is an NFT, right? Or music that's an NFT, right? Stored on the blockchain, and this one original copy is what they're transferring around, right? So it could be baseball cards or anything, right? So there's lots of different ways to use the blockchain, but NFT stands for non-fungible token. And each coin may have a variety of different use cases or a particular focus, right? So there are clusters, right? You want to talk about privacy coins? Zcash is a privacy coin. Dash is a privacy coin. Monero is a privacy coin, right? So there are projects that are clustered in a space. So you can diversify your risk, if you will, throughout the asset class by buying into a variety of different coins that do different things, right? We talked about regulatory risk. Maybe the government decides to go after privacy coins because they're worried about money laundering and everything else. Well, if that's your whole portfolio, you might get hammered, right? So if you have only a small piece, right, then it doesn't dampen your portfolio too much, right? So maybe they go after decentralized finance because they don't like it taking away money from the banks and the traditional financial system. You never know what's going to happen, right? But if you diversify within the space, then you lessen the likelihood that one attack will wipe you out. But again, the entire market tends to move together, right? Whether that's the altcoins, or Bitcoin. So it's not like, sometimes you have some that go against the grain. But as it relates to wallets, you have your hot wallets, you have your cold wallets. Hot wallets are traditionally your wallets on the exchanges, right? So you may have money left on Coinbase, money left on Binance, right? Those are your hot wallets, right? You can transfer money in and out of there. You can use them for trading. Cold wallets are something known as a Trezor wallet or a Ledger wallet. Those are the companies that make them, right? The Ledger Nano is a good cold wallet. I don't recommend you get them on Amazon or anywhere because they might be played with, right? You want to get them direct from the manufacturer to make sure they're secure. But what that does, these cold wallets, they take what's known as your cryptographic keys offline. Some people loosely say you're taking your coins offline, right? But your coins are always in cyberspace. What you're doing is taking your keys offline in this little secure device. So that it's not hackable, right? It's not like in your computer where somebody can hack it. It's in something that looks like a USB drive, right? Called a Ledger Nano. And you store your coins on the cold drive, on the cold wallet. You have your special passcode that you plug in to access, and it's a lot more secure. So, and then when you have your keys, then you have your money, right? Nobody can really take it from you, right? You can't get hacked if you have a cold wallet, unless you've leaked what's known as your secret seed or passphrase, right? A lot of the cold wallets will have a series of numbers or words that you have to secure so that you can access that coin. So if, let's say you got what's known as the Ledger Nano wallet to store your coins offline, right? Or your keys offline, and you lost it. You didn't lose your coin, you just lost the device, right? As long as you have the secret seed or the passphrase or the private words, right, that identify your particular account, you could go get another Ledger Nano and put those series of words in there, and you're back online or you're back functioning, right? Now, if you lose those things, right, or if you get hacked, if you stored them online, those phrases, and you got hacked and they got those phrases, then yeah, they could take your coin. But if you lose those phrases, you could also get locked out of your coin, right? If you lost your Ledger Nano and you lost those passphrases, you could be one of those guys trying to, dig in a dumpster to find your old computer or your old password, trying to get access. So you want to store these things sometimes in multiple places, offline, put the password in a safe, tuck it away somewhere else, so that you can always make sure you can access your coin. So hot wallets or cold wallets, but I like the Ledger Nano.
Okay. And then could you recommend a few websites that we could use to stake coins and get much higher returns than keeping money in the bank?
I could, but I don't want to because I haven't done it yet.
Yeah.
And so there's a lot of I tend to stick to what I know and explore a little bit later, right? So there are definitely some websites you can use to generate yield and that you can loan money to. But I haven't yet done it myself. I have reservations, right? And I get it. Some people are making big money. You know, you're letting your money sit there, you're making 10%. It's a lot better than the savings account. But, you know, there have been maybe some platforms that have financial losses or hacks or whatever. You know, my level of comfortability hasn't yet been there. Now, there's some very sophisticated people that are doing it. I'm not saying don't do it. I'm just saying that I haven't done it. And because I haven't done it, I don't want to put forth something that I don't have direct experience with and then have it not work for you.
I think that's fair. The next question is, what are the chances that regulations around the globe, like what happened in India recently, will create a massive disruption to the established trends?
So this is not abnormal, right? Anybody that's been in the crypto space from 2017 forward knows that countries are always doing something to screw up crypto. Right? China bans crypto like every so many years. Like it doesn't even bother me anymore, right? That's just what they do, right? Somebody's always talking about banning it or taxing it. If this is new, right? This is just what happens, right? And sometimes there can be an onslaught, and you know, chart analysts can have debates forever whether the news drives the charts or the charts drive the news, or you know, was it the chicken or the egg, right? But you can look at the charts sometimes and see, you know, where the bad news came, right? And sometimes you're thinking that good things are going to happen. I remember Elon Musk was supposed to go on Saturday Night Live and everybody was super excited about crypto and Bitcoin. And he went on Saturday Night Live and then what happened like the next day? Price crashed, right? So there's an element of buy the rumor and sell the news, right? You know that you have to kind of get into that rhythm, you know, when it comes to crypto sometimes. But you know what the governments are doing can always derail or change price action, and that's not just relative to banning it or making it legal tender, right? Their macroeconomic structures or policies can impact crypto, right? You know, if they keep printing money, well, that's good for crypto, right? A lot more money in circulation. People are concerned about, you know, inflation. They're looking for scarce assets, right? You know, people that are wise in an inflationary environment don't want to be in cash, right? Cash is trash in an inflationary environment, right? Your money in your bank account is like an ice cube melting away, right? Because your buying power is consistently going down as everything around you is going up in price. So the objective is to put your money in an asset that can appreciate in value faster than inflation, right? So some people, that's fine art. Some people, it's real estate. Some people may use gold as a hedge, but gold really doesn't do it for me. It has pretty low returns, right, year over year compared to a lot of other stuff. You know, and now cryptocurrency or Bitcoin, right? Treasury reserve asset, right? You look at companies like Tesla has it on their balance sheet. Okay, Mass Mutual has it on its balance sheet. MicroStrategy has billions of dollars worth on their balance sheet, right? El Salvador has made it legal tender, right? So this stuff is very real, and it has some staying power. But you know, you just got to be cautious about your entry. So you know, back to one of the other questions. I think that if I'm right, you know, we're in the midst of the ABC correction on Bitcoin, right? Which could look something like this. You know, we come up here and down, maybe not all the way up here, right? And now whether we come down here to 16,000, now this may take a year, it may take 2 years to get down here. It may have, you know, you never know the timing, but you might see some kind of pattern like that. Now, what happens if I'm wrong? What are the other options? It falls straight down. Okay, well, if it did that, and I don't think it will, but if it did, and it fell straight down to 11,000 or something, I'd be backing up the truck and buying as much of it as I could, right? And then I would shift my philosophy and I'd be bullish Bitcoin and maybe a little, you know, more patient with the alts, right? So I always ask myself, what happens if I'm wrong? So I'm always winning on the trade as much as possible, right? What happens if I'm wrong the other way? And it does go to the moon, right? It does shoot up here to 100,000. Okay, well, I still have a little Bitcoin. I'll make money on that. And maybe it pulls the altcoins up with it, right? And you still make money, right? So I think it's not that we have a crystal ball and we know what's going to happen exactly. I look at this in terms of probabilities, right? What's most probable? What's my primary, secondary, and tertiary count or way that I think it's going to play out, right? And then I make my portfolio accordingly. And if I can't handle the answer to the question of what happens if I'm wrong, right?
Right.
Then I have to change what I'm doing. Right? So now I want to say that again. If you create a plan and you can't handle the answer to what happens if I'm wrong, then you need to make an adjustment, right? Because you don't want to be the guy that remortgages his house to buy crypto, right? And now you can't pay the rent or the mortgage next week, or your kids can't go to school, or you're ready to jump out the building. You don't want to be that guy or gal, right? You want to be in a position where no matter what happens, you're going to be okay, right? And that's important.
Okay, so we have three or four questions on the deck, so we need you to be a little succinct so that we keep our timing.
Okay.
Will access be given to the recording? And I think you mentioned this in the beginning, YouTube?
Yeah, if you guys give it to me, because your group is recording it, if you give it to me, I will add it to our YouTube channel and make it visible.
Okay, perfect. And then how much time weekly are you spending researching and investing in crypto? Do you consult with a financial advisor, or are you doing all of your investment and development of your investment strategies on your own?
I do it all on my own, but I'll qualify that. No man is an island, right? But I don't have a financial advisor in the sense of somebody to go to. I absorb as much information as possible. I read the news, I read articles, I go on YouTube, I watch other analyst reports, right? Not just the great YouTubers that have really been in the space before Wall Street got there, right? Definitely those, but I'll also look at the Wall Street reports if Fidelity puts something out, or what, I'll read as much as I can to get a global view and a microscopic view of what's going on. And create the best plan I can. So no, I don't refer to any financial advisor. And I spend massive amounts of time doing this. I live in front of the computer. And for those of you that haven't really gotten started, and maybe some of you can relate that have, it becomes very addicting, right? Where you'll have these apps on your phone and it'll be 2 or 3 o'clock in the morning. You'll be rolling over, looking at your phone, looking at the price going, oh my God, I lost 80%. Or, oh my God, I'm up 500%. Right. And when your mind is really in the right place and you're like, oh, wow, the market's down 60%. I got to buy. Right. I'm on the phone buying at 3 or 4 in the morning. Right. Or I'm getting out of bed, going downstairs buying. I am constantly watching the market. Right. Because, money never sleeps. Crypto never sleeps. It trades 24 hours a day, 7 days a week. It's not like the regular market where they punch out at 4:30 or 5 o'clock. This trades all days, all year, around the clock. So I'm constantly in front of the computer. Even when I'm out doing other business, I have my phone open, my app open, so that I can respond to things and make moves depending on how the market swings. And there's been times that frequent monitoring of the market enabled me to get out of certain trades before the market crashed. If you watch some of our other group videos, you'll hear one of the members talk about how I called him at like 2 or 3 in the morning and said, I'm selling everything. Right. And I think it was a text message, and he saw the text message when he woke up at 3 in the morning, and he panicked because he said, well, if L's selling, I'm going to sell. I'm not saying you should do what I do, right? Because I'm not always right. But in that instance, he sold, the market crashed the next day, bottom fell out. And I was happy as I could be because I was sitting on all that cash. I just bought it all back after it crashed. Right. So, but you have to be watching it. And it's happened the other way where I've gone to sleep and I woke up and everything I thought was going to happen happened while I was sleeping, and I just missed it.
That happens. Are these transferable to other people?
Yes.
Yeah. Okay.
Okay. So think of this. This may not be the best analogy, but consider email, right? Or you can just send an email to anybody you want. You can forward it to anybody you want, as long as you have an active email account, right? So likewise with the cryptocurrency, you can forward or send that particular coin, right, to whoever you like, provided that they have a wallet that's capable of receiving it. Okay. So on that issue, you cannot send a Bitcoin to an Ethereum wallet address, right? Right now, it has to be a Bitcoin address receiving, sending to a Bitcoin address, right? Unless you have one of those fancy wallets that's self-segregated. If you're sending to an email address, that there are some other layers to it. But generally speaking, Ethereum to Ethereum, Bitcoin to Bitcoin, XRP to XRP. So as long as someone has a wallet capable of receiving that type of coin and an address, you can send it to whoever you like. You can send it across the globe. You can send it across the room. You could put it in a cold wallet, save it for your kids. When I was coming up, my family would buy savings bonds and stuff. Not me, not now. I'd buy Bitcoin.
That's right. What are the tax effects of selling your crypto?
So it depends where you are. In the US, it's considered property, right? At least by the IRS, right? So now you check with your own tax advisor. I'm not a tax expert. I'm just telling you what I know from dealing with it, but you confirm it with your own sources. Crypto is considered property by IRS standards, which means it's subject to short and long-term capital gains. Okay, so generally, if you keep it over a year, you get the benefit of the long-term capital gains, lower tax rate. If it's short-term, less than a year, then generally you're going to have to pay short-term capital gains, which generally would be consistent with whatever your income level is, or whatever the income tax rate is. So it can be it can be to your disadvantage to frequently move in and out of positions. And one thing I want to point out also is the value of holding for the long term. I'm more sophisticated than just buying it and leaving it at the, but if you didn't know any better, right, and you bought the top of the market in 2020, 2017, you'd be sick watching it go from 20,000 to 3,000. But let's just say you had the heart to hold because you believed, right? Even if you bought the top, right, when it hits 69,000, you can still be up 244%, right? So from 2017, you got 2018, 19, 20, right? So in 3 years, you would have made 241%, right? That's or 4 years, 3 or 4 years. That's still a good return by normal stock market standards, right? So I just want to point out, if you're willing to buy and hold for the long term, provided that Bitcoin remains in play, and I think it will, because there's a lot of institutions and infrastructure building around it, right? Even if you buy at the wrong point, if you're willing to hold it for several years, you still win, right? Even now, after the crash, if you bought the high in 2017, you're still up to 93%, right? So just think, if you had a little bit of sophistication in your trading strategy, and you just knew enough that you weren't going to buy the top and you were just going to buy it when it crashed, right? Maybe you didn't pick the bottom. You got to be real lucky or good to pick the bottom. Let's just say you bought it in here. Right? If you just knew enough to say, I'm buying when the candles are red and nobody wants it, and you bought Bitcoin at 6,000, right? Today, you would be up 500%, right? So don't think that you have to be like this super expert trader watching the screen all the time like I do, right? If you just buy it when it's red, right, after it's crashed 50, 60, 70%, and you're willing to hold it for several years, right? History shows you that you'll be rewarded, right? You come back here to 2000, what is this here? 2016, right? If somebody was in the space in 2016 and rode it up to 2017, that's 8,000% just by buying and holding without trading. Now you're paying long-term capital gains instead of short-term capital gains. You don't get stuff like this in regular markets, right? So even if you don't know how to trade, you're not picking the bottom. Just in my opinion, when everybody's screaming about it and your grandmama's calling you saying, how do I buy Bitcoin? And it's all over CNN, that's when you don't want it. Right? That's when it's time to be selling and taking profits.
Okay. And then, are there any entities that operate in this space, like a mutual fund that diversifies at low, mid, and high risk?
So there are ways to get exposure to crypto without directly purchasing the crypto. Grayscale is a large entity that has the Grayscale Bitcoin Trust, Bitcoin Cash Grayscale Trust. They have trusts that are set up for various cryptos as investment vehicles. So you can go on TD, Ameritrade, Vanguard, whatever, and buy those investment vehicles, okay? And sometimes they're blended, right? They may have weighted portfolios that are a combination of different cryptos. There's hedge funds out there that are investing, but you have to be an accredited investor. Which generally means you have to have a certain amount of liquid net worth or certain licenses, to be qualified to understand the risk involved or be able to absorb that risk. So yes, there are funds that you can get exposure to the coin without holding it directly, and there may be companies. I think Grayscale just came out with another trust that is a blend of different companies that are involved in the infrastructure layer of crypto and blockchain. So if you wanted to get exposure to that, you could start buying some of those as well. But so it's up to you. So it is possible, absolutely. But again, as I look at the crypto charts, I'm holding. Right now in terms of what I'm doing, I'm still holding on to the idea that alt season is coming. Hopefully before April, maybe by May. If Bitcoin gets back up into the mid 50s and the alts haven't done anything, I'm going to have to reassess that idea, and to redecide what I want to do.
Okay, and then there are several people who want to know, how can we find out about the crypto group you're referring to, or what's your YouTube channel called?
Sure. Let me see. We just started the YouTube channel. Let me see if I can bring it up. YouTube. Okay. Where is it? These are some of the people I follow on the side. Blockchain Backer is very good, but I post the videos that I think are real key, so you don't have to go watch 100,000 of them. Let's see, where is it? Okay, I'm looking for an email address that I had. Hold on. Okay, so if you email Tasha Brown, TASHAYBROWN @gmail.com. She's part of your group, obviously. I made her an administrator of the group. Okay, so if you email her, you can basically opt in by emailing her. She'll make sure you get linked into the chat group. Okay, so again, that's Tasha, TASHAY Brown, BROWN @gmail.com. Okay, and she will add you into the chat group. And our YouTube, here it is. Here it is. Crypto Investing is our YouTube channel. We've posted 2 videos. So if you guys get me the video, I'll add yours here. But Crypto Investing, we do it live. We have about over 100 members in the actual chat group itself. And I just created the crypto channel so people could watch the video that weren't there for the live sessions. But this is a channel you'd want to subscribe to if you don't have WhatsApp or you want to see what we post when we post. I don't make videos on a regular schedule. It kind of depends on need and what's going on. Most of the interaction happens in the chat group, and then we kind of flesh it out with videos like we're doing today.
Perfect. And the final question is, if the dollar was to crash, how would that affect crypto?
Well, that would probably be good for crypto in my view. Let me see if I can find this thing here. Let's see, I got too many things on this menu here. So this is the DXY, the US dollar currency index. And generally, because you're trading Bitcoin against the US dollar, in most cases, you can trade cryptos against cryptos. But if the value of the dollar went down, right, that would generally be pushing the value of Bitcoin up, right? So usually they would have like an inverse relationship or correlation, in my view. So that we would want to see the DXY, which is the dollar currency index. I would want to see that kind of come down here, right? If this came down this way, right? If we saw the DXY do one of these, right? To me, that would be bullish for Bitcoin, right? So.
Yeah, excellent. Eldridge, I want to say thank you so much, but I want to give an opportunity before I close out. Our Madam President is on and our committee chair is on. So I would like to give them an opportunity to say something if they want.
Thank you so much. This has been an extremely informative session. I mean, you have really presented this information and content in a way that is easy to digest. It is a lot, and I want to applaud and thank you so much for your professionalism. I typed it into the chat in terms of not wanting to give specific advice, but giving us enough information that allows us to go and ask the right questions and do our own research, which I think is so responsible and so much appreciated. So thank you so much to our committee leads, to Tasha, Sister Tasha, for making the connection. This has just been a wonderful, wonderful webinar.
Thank you so much. And It's a high level overview. I know it was a lot and maybe we bounced around. I try to answer the questions, but for those that want to take a deeper dive, I definitely recommend watching our videos because we definitely go into some trading strategies. And I'll probably do more videos in the future because trading isn't as hard as you think it might be. Just looking at this chart, this is the stochastic RSI. You can see when it starts to turn up right down here, what happened to the price? It went up, right? So, there's a lot of things that aren't rocket science that just need to kind of be decoded. So like the average person can understand it. And then you can look at the chart and do the same thing.
Thank you. Sister Jackie?
She's probably on mute.
Sister Jackie, are you still with us?
Yes, it was just a sticky button. I just want to reinforce the thanks. A lot of really good information and presented in a way super understandable with the risks and the benefits all conveyed to everyone. So again, thank you, Eldridge, and appreciate everyone for joining our call.
Yes. Thank you again. We can't iterate how wonderful this presentation has been. I hope you all have enjoyed it. You had a resident expert in front of you, but didn't speak like such an expert that we didn't understand exactly what he was talking about. He made it plain, he made it simple, and your questions showed that you were following along with his presentation because you asked very good questions. So once again, for a very successful evening, I'm totally happy and thank you so much for your time to our group.
My pleasure. Thank you so much for having me. And I applaud all of you for organizing this and, just having the courage to explore this new space because it's a once in a lifetime opportunity to really change the financial situation for a lot of people. If they have the courage to do it methodically, it can make a difference.
Thank you. Good night, everyone.
Good night.